This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
This week's Postgame chart deck is titled Current Intermarket Landscape. Patrick, with a lead-in like that, let's get the good news on the table. What's going on here?
All right. Let me see if I can put a positive spin on these charts, Eric. All right. I just wanted to talk quickly about these markets. The S&P 500, I'm on page 2. And one of the things on my mind, Eric, is like, in the end, there has been a lot of negative news, and the tone of everyone is incredibly bearish.
What? I'm upbeat and positive. What are you talking about?
No, but you know what? The one thing, though, Eric, is rarely does the market do what everyone expects at the moment they expect it. And the one thing is that, like, with this market already having declined for 2 weeks and it hasn't really yet broken, I kind of asked the question is whether the stock market is prepared to throw a curveball here and fake everyone out. And it doesn't make it a new bull market, or it doesn't mean that there's going to be another like 700-point advance. But, with the midterm elections coming up and everyone expecting a September crash following the 2008 analog, I wouldn't be surprised if the stock market here gave a reaction, at least to the upside, to kind of fake everyone out. I'm going to be watching this kind of 4,000 to 4,100 level to watch, because if we see that the markets over the next couple trading sessions just keep failing below there, then there's no doubt that a double bottom retest of 3,600 could be on the cards. But this is a moment where a bounce, I think, may surprise some people, at least, clear out some of the shorts that are too short-term on their time horizons, holding September expiries and things like that. We'll see. It'll be interesting. What I wanted to, though, Eric, look at on page 3 is the Nikkei. And while the Nikkei has been benefiting from a currency collapse, which is something I'll talk about in the next few charts, but the Nikkei has generally been one of the stronger equity markets. And we continue to see these wedging formations that are rolling up. It'll be interesting to see whether or not the fact that the currency got kiboshed so badly, whether or not that actually drives the Nikkei to outperform all the other stock markets on a relative basis. It's been holding up much better, and it's certainly be interesting to see whether it can make it up to 30,000 in this type of environment.
Patrick, I just want to chime in and say I agree emphatically with what you just said a minute ago about the possibility of a great big upside surprise. And as much as it probably doesn't sound that way, it's really not at all at odds with what I said earlier. I think that things are set to get much worse. But as you say, in a market, anytime that everybody expects something to happen, it's almost certain that the opposite's going to happen. And so in the short term, I've got no idea what comes next. What I am pretty confident of is this ain't over till it's over.
Right. So I want to look at page 4 and 5, where I have the U.S. dollar and the U.S. dollar yen. And the U.S. dollar continues to plug higher. What is interesting is that we have some pretty interesting crossroads right now in the currency markets. I don't have the chart up here, but like when you look at the U.S. dollar CAD approaching its previous high, the Australian dollar double bottom testing, the pound sterling finishing a measured move to the downside. And on page 5, you can see the absolute melt up of the U.S. dollar yen, which is actually almost accelerating to a parabolic rise, which is essentially almost a collapse of the yen. And so we're seeing some pretty extreme currency moves. And one of the interesting things is the euro is diverging a little bit. At least it's lost its downside momentum. And it'll be really interesting to see whether we're in sort of like the 7th, 8th innings of this current impulse of the dollar. I don't want to imply a major dollar reversal yet, but certainly I think that the conditions in the dollar are overbought enough that it pausing and mean reverting a little bit here could be a thing. And if we see that action happen in the currency markets, the thought I have is that maybe that is what kind of gives the markets that short-term bullish impulse that may drive a little risk-on event as the dollar takes a break from this crushing advance.
Patrick, I agree completely. My view, bullish view, that the dollar rally is set to continue stands. But hey, we just hit what looks to me like a test of the top of the channel. There's plenty of room to come back down to 106 or so, and it's not at all breaking the channel. It's all still part of the uptrend. Lots of room for a pullback here.
What I wanted to look at on page 6 here, Eric, is looking at gold. But I felt like what I wanted to make the observation, everyone was always benchmarking gold or observing gold's trends relative to real yields or negative real yields and all these other types of metrics, which of course are an influence on gold. I'm not trying to deny it. But really, this year, I think gold can be best defined as its correlation as a cross-currency to that dollar. And what I wanted to just illustrate is I overlaid gold and put on all of the cross currencies. And what you can observe is like the highs and the lows all seem to cluster in the same primary trend. And I think that at this moment, whether or not people are looking at gold as an inflation hedge, really what gold continues to prove itself at this moment is simply to being an alternative currency to the US dollar. And the US dollar bullishness is really what arguably has been the drag on gold's performance in this cycle. With that said, Eric, let's move on to crude oil futures. And I really wanted to just observe that breakdown candle that happened yesterday that broke that support line. You can see through July and August, those lows just above $85 were holding and containing almost all of the short-term lows. And really, this breakdown certainly triggered, I'm sure, some stop-outs and maybe even some modest margin calls and kind of cleaned it down. But what's interesting is we're still trading within the fib zones. And one of the things that I'm going to be watching right here is whether this was a fake out breakdown. And now I'm not trying to make that call yet, but if we see for whatever reason in the next few trading sessions that we're back to $90 and that this was one big fake out, then that will be probably one of the bigger tells that maybe that a short-term low may actually be in crude. I'm not making that call yet, but that's certainly on my mind.
Well, that's interesting, Patrick, because I'm thinking about the very same subject, but from a different perspective. You as a technician think about it from the technical chart. What I'm thinking is, what's the number where OPEC Plus decides it's time to jawbone and defend the market? A lot of people thought $100 Brent was what they were going to defend. We didn't get after this event last night and today, early this morning, while Europe was still open, just as the U.S. was opening. That was the perfect time for OPEC if they were going to try to jawbone. We're going to consider deeper cuts. We're going to do whatever it is you want to hear to make you defend the market. When they did that last time, it was an instant trip up by almost $10. I think that would be the case again. And the question is, when do they take action? A lot of people thought they were going to defend $100 Brent. Doesn't seem they're doing that. Maybe it's $90 Brent. That probably makes a lot of sense as a number. I'm not sure. But at some point when OPEC Plus shows the market, okay, this is the floor that we're going to defend, and everybody knows that that's where they're putting the floor in, I think then you have the setup for a structural rally to really begin.
All right, well, moving on to page 8, I just have that chart of the RBOB Gasoline Futures. And what is interesting is while oil's been pulling back, it's absolutely amazing the collapse that we've seen in gasoline. I mean, we were trading at almost, we were trading at $4.25 a gallon, and we're down to $2.25, almost a 50% drop in gasoline in a span of 3 months. And it's led to a huge collapse of crack spreads and other things like that really have normalized things in this market. And what I'm curious about is whether or not a short-term low in gasoline futures as we approach this kind of 2 to 2.25 level will also correspond with maybe potentially the turn in oil. Certainly this downtrend has been quite surprising to me how deep it's been.
Well, Patrick, I agree. And remember that summer driving season is winding down. And although I think that there will be plenty of continued energy demand, the home construction and that stuff tends to consume more distillates than gasoline. Gasoline really goes into passenger vehicles more than anything else.
All right, Eric, on page 9, I wanted to just touch on natural gas prices. And the observation I just simply wanted to make here was what I found was interesting was almost like buy rumor, sell news kind of event that happened around Putin shutting down Nord Stream. This is like, even though North American gas is not obviously directly linked to European gas movement, you would think that that would have at least been interpreted as a bullish reaction with an uptick, but rather we saw a distinct breakdown in nat gas prices, breaking that uptrend that's been in place. It'll be really interesting to see whether or not short-term highs have been established in this nat gas market until we see the natural seasonality of the winter kick in.
I'm also perplexed by this one, Patrick. I would have thought that shutting down Nord Stream 1, announcing that it's indefinite, was basically saying that Europe is desperately, desperately, desperately in need of every possible cubic foot of natural gas that it can get from the United States via export. So given that, reassurance of demand that was already there, why would it suddenly drop then? Maybe our listeners will let us know. I am happy to admit that I don't get it on this one.
Well, what I wanted to do is touch on page 10 on uranium. And we talked about it the other week, which simply was the fact that uranium had a really strong breakout and really has been following through since. And obviously, Japan firing up its nuclear reactors was the catalyst headline. It certainly has led to follow through. And that's one of the key things I always say when you have a breakout candle like we got back then in August, it was an indication of a potential start of a trend move, but I always say that one day doesn't make a new trend. And so we wanted to see whether or not it would continue to follow through. But it really seems that there's new buying attention really continuing to flow toward these uranium plays. It'll be interesting to see whether this trend continues into the end of the year.
I think that it should, Patrick, but I'll also offer the caution that this is another real minefield in terms of volatility because uranium is a global market. A lot of it comes from Russia. In fact, the United States used to buy a lot of the uranium for its power plants from downblended Soviet-era nuclear missile warheads. They actually took the uranium, super high enriched uranium, out of the warheads, downblended it to the appropriate level of enrichment, sold it to the U.S. for the power plants. Obviously, the world is changing, and between Russia, United States, and China, the three major global superpowers, if who's willing to sell stuff to who changes, then the U.S. uranium market could go dramatically up or down overnight almost just on some kind of news about a change in sanctions or a change in export rules or something like that. So there's definitely volatility caution here, but I think there's plenty of room for further upside in uranium. Listeners, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. Information is on page 11 and 12 of the chart deck, or just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week, free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit macrovoices.com.